This is a trade recap for Monday, June the 18th, 2012 on the ES Runner and Eurorunner trading systems. Taking profits from 1:30 in the morning. Used to be 1 o'clock, but we're really looking towards taking profits more when the market gets going, which is about 1:30 to 2 o'clock in the morning. We're using 1:30 for taking profits. Nothing here happens even at 1 o'clock. 1:30 still nothing happens, as you can see. Certain markets in Europe open up around 2 a.m. Eastern Standard Time. So that's why we're going to start taking profits from 1:30, maybe even as late as 2. But 1:30 looks to be very safe and gives the opportunity for traders to get into early moves. So in this trade here, the first trade loses. The entry was taken here at 2:05 in the morning. Taken exit at the first cautionary triangle. If you have a flat line on the stop loss line was occurred here, that's -5 ticks on 2 contracts. Here you have an entry short. One contract here, the first take profit is 6 ticks. Second contract is brought to a break even, and then to a runner status. The scalps here, this first scalp becomes valid to take, but it's not. When I say valid to take, it's valid for those who've made profit on their first contract and have nothing in the market to lose with the second at a break even runner status. But this is technically not the first scalp in a series. That one is, which is a cautionary scalp in the first 5 periods. You don't take scalps as a rookie. First 5 periods of the stop loss line. This scalp is the first valid scalp for someone to take that's bank profit on part of their position, which did happen here on this candle, but it's not an intra-series scalp that's valid. So even though the scalp does make 6 ticks of profit, I don't use it as profit for the system today. Moving forward, but a lot of traders did tell me they took this scalp. So again, those that are a little more aggressive and don't strictly use the most conservative rule sets, which are the rookie rules, then they took this trade and they made 6 ticks off of this scalp as well. Here, the scalps here are not printed in blue, meaning they're not valid to take. These are for the non-rookie trader. These scalps did make money, but when you're not beyond the yellow line by at least a tick, a lot of times scalps fail, trades will fail inside of the yellow here. This scalp hit the yellow and basically rode it all the way down before it eventually made profit here. So we use this rule because it tends to produce safer trades. The runner's taken out here just before the market opens. The U.S. market opened at 9:25. On the 18th, this day, there was no major news to contend with, which would require exit of any particular positions, including a runner. So this runner here at the exit, 1 candle before the market open, which is a rule for exit, was a 35 tick winner. Next we go to the 2-minute systems for the market open. Go back to 6:18 at 9:30 in the morning. At 9:30 we'd stay out of trades between 9:15 and 9:45, 15 minutes prior to the market's open, 15 minutes after the market's open. Very dangerous, not for rookie traders. There was a trade that happened here at 9:40 in the morning. The room didn't take this trade. Some did, but the majority didn't. The first qualified entry for a rookie after 9:15 was here on this entry here. The scalp open price, you take the open price. You have to act these scalps very quickly. You are to take the open price, and you're to take a tick worse or a tick better if the prices go up or down from open. You take your 8 ticks of profit in the regular trading hours on a scalp from the open price, which was hit here 3 times. Otherwise, it was hit here again, went through it, 3 ticks through it. Now, this was actually a sprint trade for several traders. They actually made 10 ticks on this trade, not 8. But the sprint rules have been to use 20 bars of stop loss line being flat, and then the first turn up on the stop loss line, you take a sprint. But going forward, we're going to reduce that to 15 bars because during the regular trading hours, 15 bars times 2 minutes each is 30 minutes. It's an awful long time for the market to the flat line to have gone flat. So we're going to use 15 bars going forward. So this trade going forward, including today, did make today being June the 20th. I'm doing this video for the 18th on the 20th. Today we had some scalps at some sprints at 15 periods on the stop loss line that made money today, but on Monday this was not yet an embraced rule, so I'm only taking 8 ticks of profit, not the 10 they would normally make, which would have been made right about there. This went 11 ticks, this made 10, so anyway. Many traders took the 8 ticks on this day. Some of them held out longer because it was a first scalp, in a trade. It was the first qualified scalp. Many of them made 3 and 4 points in this trade, got out up here. They held it longer because the first scalp in a move is many times capable of making more than 2 points. This is a very conservative take profit. This scalp here is qualified. Unfortunately, it was entered here at the top of the move. It went up about 5 ticks and then fell and lost 8 ticks. This here is a short that occurred at 11:08, but I told the room that because it was a cautionary trade that we were looking for a 2-point pullback, so the traders didn't take this trade, but it was my mistake in the rules. We should look for a 2-point pullback on a movement down on a cautionary trade only when the system generates a chase price, which is the second price. This, as you can see here, the first price of a long is called the trigger. The second price, when the prices don't penetrate that trigger price, is called a chase. On a cautionary trade, because it's a more dangerous trade, it's more dangerous because anytime the previous move makes over 5 points in total movement, the next move is called cautionary. On a cautionary trade, if we get a chase price, we take the chase price, we take a 2-point pullback from the swing high to the swing low. I'll explain this better in the room to anybody who would like to know more about this when you come into the free trial. It's very easy to understand with about a 10-minute explanation and some examples. So traders didn't take this trade, but it actually was a profitable trade. It should have been a trade that traders took. It was my mistake in the room that day. Unfortunately, I was very busy with some individual traders, and I missed this trade, and I told them not to take it, and it actually was a qualified rookie trade. It did make the 2 points of profit from the entry price, which was trigger, again, not chase. But I'm not counting that toward the day's totals. Here we have a long at 1:24 in the afternoon. 8 ticks were made on the first contract. The second contract, because it's a standard entry, 2-contract trade, is brought to break even as a runner and then closed at the cross of the stop loss line here. And let me get my the total profit for the day was off the chart there a little bit. I need to auto scroll this. Sorry guys. Let me auto scroll that. Okay. And then we have a short here at 250. That short here on the trigger price made 8 ticks of profit on this candle here. This scalp was then valid to take because you banked profit on your first position. That scalp was entered here. It made about 6 ticks. Unfortunately, it didn't go the full 8 it needs for take profit. Taken out at the first cautionary triangle. Immediately when this happens, you have to immediately close your position. This position ended up making 1 tick of profit. The runner brought to break-even status was knocked out of break-even here or here. And that's the end of the day's trades. A total of 51 ticks made on each one contract traded for a standard entry. Sorry, 2 contracts traded for a standard entry, which is 1 contract here, and then 1 brought to a runner status. 1 contract only traded on a scalp, 1 contract only traded on a sprint, and 1 contract only traded on a cautionary trade. The primary trade is the one that you trade, the 2 contracts. Now this is for small account holders, those that have a small account under $5,000. For people that have larger accounts, you simply take the standard entry, position size, you divide it in 2 for a scalp, and you divide it in 2 for a cautionary trade. So 51 ticks were made total for the day. If you look at all the different trades, for a total of 12.25 points, 12.25 points. Now for the euro. The euro on the 18th, again we look at starting things from 1:30 or 2 in the morning. Right now we're using 1:30. First trade here makes 148 ticks with only 4 against. Outstanding trade. Unfortunately, it didn't cross the yellow line to qualify as a rookie trade, so then you get into the sprints. Periods of 10 bars. When the stop loss line goes flat, the first turn down is a sprint when the first arrow comes in. That would be what you see. Let me make this bigger. That would be what you see right here. The first arrow triangle comes in after 10 periods of the stop loss line going flat. It's called a sprint for the euro. 20 pips are made here. These scalps are not valid intra-series. None of them are taken. Again, it happens again. Entry on a sprint, but unfortunately, it didn't meet the 20 pips of profit. It hit about 17, went up, closed the first cautionary triangle for negative 3 pips. Next sprint comes in right here, positive 20. Positive 20 are made from here to there. And then finally another sprint comes in here for positive 20 pips made on this candle for a total of 57 pips made for the day on the 18th. 57 pips net per lot or mini or micro, whatever you might trade. Thank you very much. Look forward to seeing you in the room to learn more about this exceptional system that has had an 87% success rate for the last 44 days. Thank you very much.